General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Second quarter, May. Yeah. Week 1. Today is Monday. Monday 4/28, 25. News. Today was a no news day. Tomorrow, Joe's jobs. And where's this at? They expecting job openings to go down. That's not important. Consumer confidence, they're actually expecting it to go down. Nothing came out today to affect CME Fed Watch. Not that I know, unless Trump did something. Yeah, it's still low. It went up like a few percent from yesterday, but for the most part, it's still low. Still low on the chance of rate cut. See June 18th. Mm, 60%. Chance of rate cut for June. Earnings for tomorrow. Here we go. Visa, Sophie, Starbucks. Nothing big on tech until Wednesday. Microsoft, Meta, Amazon, Apple. Thursday. Nothing for Nasdaq. Or no top 10 Nasdaq companies reporting. Tuesday. Let's look at the dollar. I updated this. I really wanted less than 60. No, we could do 60. Okay, let's get this right because came up here, disrespected this order block. You can kind of say bullish still in range ideas. Still never got this retracement. So this whole week was accumulation. This push down. We came back to EQ of this range that week and then pushed down. This could be a sell side liquidity run to get this. Still ain't take that. Kind of moving up now. Maybe a little push down. I still think we need to run this high though. I don't think it's done with buy side. This looks like a run on internal range liquidity. This is that range low. So I'm thinking run this low, push back up. Run on internal range liquidity, then back to seeking buy side. I think previous week's low is safe. What happened today? I was looking at all kind of stuff. So let me take my execution stuff off the chart. It was a good execution though. It still ain't take Friday's low. We're running today's high. Friday's high was taken. I keep Friday's low on the menu. There's still relative equal lows. This is TGIF from last week. It's not like a real key level. Today, week Friday's high came and swept Asia low and then pushed back up. And that came to, you can't say it's premium discount, whatever, but this was overnight range. This is regular trading hours range. Hold up 1 second. All right. Price wicked Friday's high. Ran sell side. Engineer sell side from overnight session. And then push back up in the day. See what the weekly looks like. Oh, snap. Oh, this weekly box. Because of the update, yeah. Settings reset. I updated everything that all the indicators I made through ChatGPT version 6. I put them in the Telegram. We closed above here. Still look like we can be going there. It's a nice tap. I still like buys to there. I just don't like buying unless we buy under lows. Like I want to see a daily low get taken. Okay, nice wick down. I still like weekly objective. And 20.04525. I'd just rather buy under lows. Nice wick of Friday's open price. Still nothing up here too interesting. Hold up one more second. Cool. Where did that put that? All right. I'd rather buy up under one of these lows. Look at how this gap from previous week's range is still here. Monday, Tuesday, Wednesday. That's a serious gap. Small range Monday. I like to see both sides of this get taken. No real displacement yet. But we have a lot of news this week, plus earnings. I prefer to see reaccumulation under lows and then strike one shot, one kill for higher. This was a sideways day. I still want to see both sides get ran. Approaching this with a if this then that approach. Until price shows displacement or respect PD arrays. Still want Friday's low. Well, we split both sides of this. This will be an area I'm looking at right here. Not really like a line in the sand or nothing like that, but still, especially when this didn't take this, like this, missed this. My eyes are still on this. Still looking at Friday's low hanging fruit would be here. 19,371. Still think we need sell side. I won't force it. with big risk. I'm wait for a textbook setup. Also, no, price has been choppy and messy. Low hanging fruit is 19371.50. All right, that's that on that. Y'all have a good day. Peace.